What's going on, you guys? Charles here from the Traders Corner. Today we have some analysis for you, but we're doing a bit different. So did analysis on one day in the week and kind of came back to it later on in the week to kind of check how it played out. And that's what we're doing here on Dow Jones, S&P, and Nasdaq. Also in the video, we talk about the CPI print, kind of how it's constructed, and an important part of it to understand the number and understand kind of how the number is moving and changing. So you can really understand what's happening with CPI and not just hear a number and just think, oh, it's up, it's down, like everybody else is trading, right? So you can really get that edge. So I hope you guys enjoy the video. Hope it provides some value to you. Try us again next time. Today, I'm just going to be doing some quick analysis on the indices, as we're definitely starting to see some movement here, and we're actually starting to see a bit of divergence in the indices. So we'll get into that and get into what that means when I say that. So let's get started. So first and foremost, we'll start by looking at the Dow Jones. Now, looking at the Dow Jones, again, we'll start out on the weekly as we have been, right? And again, like we've been calling out in previous videos, we've poked into this area that we'd identified as a possible area for us to run into, right? We identified it when we were around here, so it wasn't that like crazy of a prediction, right? So we have poked into that area and we've started to see a bit of a reaction from that area. Now, that being said, we've been starting to see some different news and stuff kind of come through about the markets, and like people start to say, well, yada yada yada, we're heading into a recession, blah blah blah, right? I'm not saying that we are or we aren't. I'm just saying that kind of I've started to think differently about news in terms of, to me, I literally just look at it in terms of this idea of how are other people thinking and feeling, and knowing that I'll then look at the chart and kind of get a sense of, okay, well, based on how people are thinking or feeling, based on what people have been saying in the news, like financial news, maybe this means that or that means this, blah 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 blah, right? I think we have a good case of that today. So if we look at the daily, as we look at the daily of these three indices, that's where we're going to see the biggest, I guess, like you'll see it the most, right? So first and foremost, looking at the daily, again, we poked down into this area, we've pushed up. Again, as we've identified in previous videos, we made this nice swing high, made a swing low, and we broke above that swing high with some fairly, decent price action here, right? We had this gap in here, a fair value gap here. Both of those things were filled. We have a gap in here actually as well, and also a fair value gap in there. But as we see here, we're not able to make new lows on Dow Jones from the past week, right? So that's the daily, and then we'll look at the 4 hour. Let's get a bit more into it. 1 hour, and then we'll look at the 15. So identify this guy here, right? First and foremost as a good area. I'll drop lower. I'll look over here. Right. And 1 hour. So we have a large gap here on the 1 hour. So what does that mean? Very dynamic price action we got here. Saw a very sharp, move higher. So sharp that basically we didn't even like show this price. That's how quickly the price was moved through. So what do we have? 1, 2, 3. Yeah. So let's get back out to the daily now. We've done all that. Kind of our last line that we would expect to see a reaction from. And then at this point we have this line in here, because if we, close past this, then everything I'm about to say next kind of goes out the window. So we'll look at the S&P. S&P, we're seeing something fairly similar. The weekly, we're not completely here like we are on the Dow Jones, but we are in this candle wick right here. We have touched into that, at least halfway, I think is what it is. Let me just throw the line on. No, not halfway, but we just tapped the top of that wick there. The daily, what are we seeing in terms of the daily? Well, again, we weren't able to actually close past or close lower than this candle here and this swing low here, right? We weren't actually able to make a lower low, lower close. Again, we go all the way down, 15 minute, 1 minute, all that good stuff, right? You can see here that we pushed down and then we wicked up, right? We didn't want to close past this guy here, and this guy as well. We wicked up. We look at the 5 minutes and 1 minute. So 1, 2, call it 3. Bang bang boom in this area. A nice swing low for us to run below as well, right? So that's kind of our area we would expect to see a reaction from if we're going to see a reaction. 35.93. And then Nasdaq is really what I wanted to talk about today, because if we look at Nasdaq, we can see a bit of divergence in the indices, like I mentioned when kind of in the beginning of the video. So again, we look at the weekly, and we'll delete these lines. Actually, I'll just leave them in there. We look at the weekly. We've been pushing down. Now we've been identifying the fact that the Nasdaq looked a bit different in terms of looking over to the left for a while now, right? And then on the daily, again, we had similarly formed a swing high, swing low, pushed up. But this time when we pushed down, we actually were able to push down and form a new lower low, lower close. Now, generally when these things happen in terms of the indices, because they're all three are US indices, and even though they're made up of different stocks, different stocks are going to get hit different than others. Generally, when you start to see some divergence in the indices, that's when you start to see some real movement in the indices come through. I'm not saying that the movement has to go to the upside or has to go to the downside. I am of the mind, or I am forecasting that we're going to see some movement to the upside, right? Like in terms of Nasdaq, what could we see? We could see a pop back higher above this swing high, and then a push back down, and then a move higher. So we could get into these areas that we have been identifying for the past weeks or so, right? So up into here before dropping down again, right? Before forming another leg of this overall downtrend that we've been in on the daily. So again, we just pop that out. This overall downtrend we've been in on the daily, right? And again, similarly, I'm anticipating, I'm forecasting a push higher, right? So we can get up into this area again, so we can get that drop down. But that doesn't have to happen, and I understand that that doesn't have to happen. I could be completely wrong, right? And that's okay. So what could happen? Well, I could be completely wrong and this be divergence to the downside. So what do I mean by that? Well, it could just be the fact that the Nasdaq is leading the Dow Jones and the S&P in this sense, right? Well, why might the Nasdaq be leading the Dow Jones and the S&P, blah, 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 this kind of stuff? Well, if you hear about what people have been talking about in terms of the stock market, the things that are affecting it, the interest rates, all this kind of stuff, it makes it harder for most companies out there to operate. Higher interest rates generally just makes it harder for most companies to operate. I'm not going to say all companies, because some companies actually benefit from higher interest rates or stronger US currency, all these kinds of things, right? But there's most companies out there, it's harder for them to operate with higher interest rates. If you want to understand why that is the case, definitely go check out our video on what is the Fed. We talk about what is the interest rate environment and why that is important for stocks, and understanding the interest rate environment, and why understanding it is important for your own personal stock portfolio. But it is specifically hard for tech companies in rising interest rate environments. Why? Well, some of these tech companies have debt on their balance sheets, and on top of that, they're what are called very high growth companies. What do I mean by that? They're not throwing off a ton of cash flow because they have to reinvest their money in building new tech all the time, right? Like Apple is a unicorn in terms of a tech company because it has a ton of cash on its balance sheet, and so it has a ton of cash to consistently invest in R&D. But if it didn't, it would consistently have to plow whatever money it makes back into building the new iPhone, new AirPods, new whatever it's building, right? New iPad, whatever. So that is why the Nasdaq might be leading the Dow Jones and S&P lower, and why I might be wrong with my analysis that we might push higher a bit, to then push lower. Because again, like I'm saying, I'm not saying that we're not going to go lower. I'm just saying, or I'm anticipating, or I'm forecasting that the market has extended itself a bit, right? It's kind of gotten everybody on one side again, and now it might need a bit of a reprieve to get other people on the other side, get some people on the other side, get some people bullish so it can continue its move bearish. Do I think that we might head into a recession in the next 6 months? Yeah, probably. And what does that mean? Likely the stock market indices are going to trend down or trend lower. So that means we likely have a bit more room or, leg to go on these downtrends that we've been seeing on the indices on the daily, right, on S&P, Nasdaq, Dow Jones. So I would anticipate us to continue lower. But I'm not just going to jump in. I'm going to try to enter on what I think is a healthy pullback. What is a healthy pullback in this sense? It's these areas we've been identifying for the past few weeks. Well, how does it get to those areas? Well, I think one way that it might get to that area or those areas is what we talked about today with this divergence and the fact that, again, the Nasdaq has made a new lower low on the daily, while the Dow Jones and S&P have not. The Dow Jones and S&P are still within these areas where we could see a nice push higher, right? We're still in this overall area where we saw swing high, swing low, and then we pushed up, pushed down into this gap, down into this fair value gap as well, and in this nice candle formation area for us to possibly push higher, right? So, hope you guys enjoy this video, man. Hope it provides some value to y'all, and join us again next time. Thank you. All right, you guys. So today, I'm just going to be doing a bit of a follow-up to the analysis that we did earlier in the week, and this is kind of the way that I want to go forward with it. Do the analysis, kind of earlier, and then kind of follow up with it later on to kind of show you how it went, right? So let's start here with the Dow Jones. So if you remember from our past video, or at least past videos where we were looking at the Dow Jones, or at least I was, maybe not so much the video where Amber was doing the analysis, but at least the videos where I was looking at Dow Jones. We've been flirting with this area for a while. We'd looked to, push below it, and we actually failed to close below this here to make a new lower low, lower close. And on the daily, we actually saw this sharp retracement higher, right? And as we saw in the beginning of the video, I was actually talking about the fact that we were seeing a bit of divergence in how the indices were moving, right? So as we can see here, both S&P and Nasdaq were able to make lower lows, right, and lower closes here and then here as well. Well, that's an open, sorry. Lower low and lower closes, right? But essentially, after we make this lower close here, we get a sharp push higher, right? And then again, same thing, get a lower close here, right? I think that's the last one because I don't think that closed lower than the other one. Yeah, well, I can just check it here. Close A5, close 9-1. No, so this was lower. So one more lower low, lower close, and then we push up here, right? And so we'll drag this fib tool down to here, just open, right? And so essentially, like I was saying again, we were seeing a bit of divergence in that both the Nasdaq and S&P, when we were looking at them, were actually able at that point to have already made lower lows, right? And so we were saying the fact that the Dow Jones not making a lower low was an interesting thing to look at and be aware of, and that it might denote to us that we might see some sharper price action come into the market, right? So what happened yesterday, we actually had a CPI print yesterday. It actually came in a bit hotter than people were expecting, but I think, there might be a bit of lag to this data, and I think a lot of the sharper market participants are starting to realize that maybe the next CPI print maybe won't be as bad, just because of these lags in data. So what do I mean? Well, the big thing that's coming up for the next CPI print is the idea of the healthcare cost, or the healthcare component of CPI. That is about 11% of CPI in terms of the number that comes through, the composite number that comes through. And the way that they measure healthcare, it basically lags for a year. And so essentially what we're expecting to see in the next CPI print is to see kind of the pandemic affected healthcare numbers come through. Now you might say to yourself, well, pandemic affected, isn't that going to make the healthcare more expensive? Well, actually no, because what we saw during the pandemic was a lot of people didn't really want to go to the doctor for elective surgeries or anything that wasn't really vital. You know what I mean? Like, say for example, like I had a nagging knee injury at the time, and literally just because I didn't want to be in the doctor around people because I didn't know about this stuff, like I kind of put off going to the doctor during the pandemic, and I kind of just dealt with it. And a lot of people did, something very similar. So a lot of kind of premiums while the premium stayed the same, right, there was kind of like a lot of payout, right, kind of a lot less payout during the pandemic. So the insurers were making a lot more money. So it was kind of like healthcare was more expensive, right? Because that's how they measure how expensive they think healthcare is, by how much money the insurers are making. It's a very incomplete way to measure it, but it's the way they do it. But then what we saw in 2021 was a drastic drop in how much money insurers were making, because, in 2021, let's again use myself as an example, I decided to go to the doctor for my knee, and a lot of people were the very same way, right? So you had a lot more, you had the same amount of premiums coming in, but you had a lot more payouts for insurers as well, right? And so because you have more payouts, they had less net income, and so they actually made less money in 2021. Now we need those 2021 numbers to kind of come through, because we've still been seeing 2020 numbers essentially, each CPI print. So that might be why we're starting to see kind of this reaction, even though CPI was a lot hotter than expected, right? It wasn't a lot hotter. It was hotter than expected, right? People didn't expect CPI to continue to tick up the way that it ticked up this past month. But, the market is a bit forward looking. So that all being said, that nice little ramble about CPI there. What are we expecting from the market now that we're seeing? Again, we weren't able to make this lower low, lower close here on Dow Jones. We're starting to see a push up. We're starting to see if we can attack this high here. If we were to attack that high here, I would become interested essentially in looking to see, can we pull back to this 50% level here, right? Can we pull back to that 50% level there? And if we can, then that's something that we want to take into account and start to look at in terms of, do we want to start looking at possible sell side opportunities? That's where I would start to get interested in looking at possible sells. Let's do the same thing for Nasdaq. Well, Nasdaq is much the same, but this time we just drag it to our lowest swing point. So as of right now, we don't know that this is a swing point. The market could open and literally just drop out of the face of the earth and just completely take out this open. And then this swing point that I pulled on is completely irrelevant. But as of right now, it is a swing point, right? Because let's just assume that we open and continue higher, as that's what I am anticipating based on the sharp bullish price action we had to finish the day yesterday, for real. If we, push higher, then if we continue to push higher throughout the day, then this will become a swing low, right here. This will become a swing low. So we'll drag that on. And again, we're looking to see if we can pull back to, just take this guy here, this 50% area, right? And then we'll start to get interested. And then the same thing with the S&P, right? Pull down, same thing with the swing low here. Well, the current swing low. We'll see what happens after today. And then again, we pull down this fib tool from swing high to swing low, and we say we want to pull back to that 50% retracement level. So that's what we're looking at on S&P, Nasdaq, Dow Jones. So that was the kind of, we saw kind of like the beginning analysis at the beginning of this week. And now we're seeing some follow through of that analysis at the end of the week. So we're going to be looking, kind of into the end of this week, and, today, Friday, beginning of next week as well, in terms of what the market is doing. Is it following through with the sharp bullish price action that we saw kind of to end out the day yesterday, or is it kind of starting to flip over, right? So hope you guys enjoyed it, man. Hope it provides some value to you, and join us again next time. Thank you.